Hello everyone, so let's quickly take a look at the markets and see what's going on. So on the E-mini, the last pullback was 6108. It was a bearish pullback right up here, 6108 pullback, and it was sold with the biggest volume in biggest down volume in 10 down waves at 3.1 times average down volume. So obviously the supply on the pullback came in. So it's a supply on the pullback, and that takes the market lower. All right. Now it's getting really interesting because we're very close to that support level at 58.66, and I want to see what it's going to do there. There's still selling pressure. You can see the selling pressure is still there. The numbers are, they're still there. So we want to see if this support is going to break or not. 58.66 support, is it going to break? Because we're already at 58.75, so just 10 points lower, 9 points lower, you get to 58.66. So is it going to break, or they're going to start buying? So I'm waiting for this wave to see, if it's strong or weak, or if it's weak, then yeah, it's going to, I want to see if it breaks 58.66 or springs it. All right. The next market is crude. We see a rally, 73.70. So this is a no-brainer because this is really important because it's a lot of cause. There's a lot of cause, a lot of potential, possible accumulation. I'm not really sure if it's accumulation, but that can be determined in another way, and I'll teach that later. But you can see all this up, down, up, down, up, down, up, down, up, down break right there. It's the breakout right here where it says BO. And then it breaks, and right now it's at 73.70. And so looking for, this was the rally, the initial rally of support to 78.80, then pulled back to 69.30, and it just kept going, rally, rally, rally. It's the third rally. First rally was 70.80. Second rally was 71.50. Third rally 73.70. But it's getting overbought. This third rally is getting overbought. All right, it's a lot of volume. 2.1 times average volume, and we'll see if it continues or if it pulls back. If it pulls back, it'll have it'll give an entry up. All right. So, looking for a pullback on crude. All right, now gold. Gold is interesting. This was the original rally down, and then it gave two pullback trades. And the pullbacks, did they have selling? Yeah, they had selling. It's right here. Sometimes it's a little bit squishy, but whatever. So here, when it hit 27.61. Pullback to 27.61, you can see clearly the selling pressure came in. It's 1.9 times average down volume, and broke, and biggest down volume, I think, in around 17 waves, so 17 down waves. Biggest supply, and that initiated from the if you look at the daily, you'll see a rally. And then pullback 1, pullback 2, selling on pullback 2, very significant. That basically says that I'm going to go down, and it went down. Then when it hit these support levels and attempted to break, right? It attempted to break 26.30 and went down to 25.97. Buyer stepped in right here. Biggest buying in 11 waves, 2.6 times average up volume. Followed by another COV, more buying, hit pullback 1, pullback 2, did a little shakeout, and now it's going higher. But how much higher is it going to go, and what is it up to? Because they're selling in the background, and it's testing a prior pullback. It looks like it's going to test a prior pullback, so this is important, and we'll see how it responds there. Okay. This short-term trend is bullish, but on the daily, bears in control. There's one really important thing though, which makes me think that the bulls are trying to take control, and that's the COT report on 11/26. It shows that funds are buying. So, you know, they're buying. How is it going to break? So we want to see if no, this one here on 12/10 is also, it's not that much, but it shows buying. So we'll see, the selling and compare it to these values, better understand what's going on. But this is on 11. It's reported on 11 something. 11/26. I think. 11/20. See 11/25 or 11/26. You can see it was significant. So if they're buying, how are you going to go down? They're the main participants that push prices to higher highs or lower lows. All right, next is Bitcoin. Bitcoin is getting really interesting. Why? Because it pulled back. It attempted to break back within range. It couldn't, and then it went down again. And now it's trying to break back within range. Right now, it's trying to break back within range. This first pullback here didn't get the job done because it was weak. This second one off the 93.335, when it broke that and came back in, break back in, there's a lot of volume. So this has got me thinking something's up. If you're going to break down, why is there volume on the upside? See? There's volume coming in. So now what's the next step is to wait for the pullback to see if the supply is dry. If the supply is dry, then you know what time it is. Right? The initial supply came from this high here. Right? This is 109,940. When it went there, right here, there's the supply right there. There's your COB, change behavior, sell, and they took it right to support. Initially, support wasn't able to do much. It had 1.5 times average up volume. That wasn't much, but now it's like quiet buying, and it's building up. It's building up. So, see that 19 right there? That means there's more volume in this wave than the prior 19 up waves. So what do you think that is? Or at least it's building, right? We'll have to see. And still we have to see the pullback. Now let's take a look at Euro. Euro broke right here. So this low, the 1.038 was broken with big volume, but it's a little oversold. So I'm looking for a bounce. Then we'll see what happens on the bounce. Basically, if it breaks, look for the bounce, a weak pullback, and see if there's a selling up there. Right? The copper market, you had a rally down, then it hit the pullback right here. See that? It says PB. On the pullback, what do? We look to see if there's selling. It's that straightforward. Right? Rally, pullback, rally, pullback. If there's no pressure on the pullback is in the pullback. Because what we're looking for is to see in bearish pullbacks if they're selling and bullish pullbacks if they're buying. If they're discounted prices. And at this price, Here you go. It's the biggest in 19 down waves with 5.2 times average down volume. There's no brainer that shit is going to break the low, right? No brainer. Goes up here, bang, sell, boom, down, down it goes, down, 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 down. All right, next one, natural gas. Natural gas getting interesting. Why? Because you have a rally and it's setting up the pullback. But it looks so weird. Yeah, I can't really tell. It's just too choppy. I don't know. Maybe I'm not sure if this is my data or something's off. It's just really, really choppy. So I'll look at it later. But I mean, the bottom line is that you have a rally and you want to see the pullback and you want to see what are the buyers going to do on the pullback? Are they going to buy? Or if they're not going to buy, then chances are it's going to break the lows, right? Because if the selling pressure is there, then they didn't find demand. All right. So this was the last place where there was a pullback was on 3091, and if you go to 3091, go right here. Where is 3091? This was the buying, which it's not that much. It was 1.5 times the average up volume. So it's 50% more than average. But it was enough to initiate this rally. The prior pullback at 2.9, whatever, 2977, that's where it was clear. It went to an oversold area, and you had 2.6 times average up volume, and that should set up this whole move, because they're buying the pullback, right? So the idea is there's no rocket science. On a breakout, you want to see buying pressure in terms of volume. On a pullback, you want to see the same thing, buying pressure. And if it's bearish on the breakdown, you want to see volume. And if it's not there, then there's something wrong. And the same thing you want to see on the pullback. So that's it. So what am I doing? I'm just looking for the pullbacks. And sometimes those pullbacks are simple, meaning simple corrections, and other times the pullback is complex correction, which includes springs and upthrusts, also known as these ABCs. So that's about it. And you also, okay, I'm going to try to give a lesson. Give me 1 second. I'm going to explain something, the pullback, or in general, the turning point. So market goes up, market goes down. You have rally and you have pullback. But this pullback is nothing but a turning point, right? So let's extract that turning point, and it looks like a V. All right. Now, when you analyze any turning point, whether it's at the top of a rally or bottom of a pullback, you have a left-hand side and you have a right-hand side. So this is where the Wyckoff becomes really important, because a left-hand side has certain behaviors that you must know, and a right-hand side has certain behaviors that you must know. On the left-hand side, there are two things that happen over and over and over again, and these are the shortening of the thrust and when it gets overbought, oversold, or climax. It's typically one of these two. Over and over, the same thing happens. Both of them are a form of exhaustion. Both of them are a form of exhaustion. The shortening of the thrust means that okay, they can't push price because they're done spending. All right, and the momentum is gone. So you'll see the waves get smaller and the progress made from highs to highs or lows to lows diminishes because they're tired. The momentum will diverge. Any momentum indicator, doesn't matter which one it is, it's going to start showing divergences. All right, and if you just look at it, you'll see a shortening of the thrust, meaning the distance of the waves will start shortening, and the progress from highs to high or low to low will decrease. Climaxes are a form of exhaustion because they got exhausted by moving price so much. So at the top of an uptrend or bottom of a downtrend, you see a big wave. That is the climactic action. And so both of them are indications of exhaustion, right? So the two things to look on the left-hand side are shortening of thrust and climaxes. This is what happens over and over again. On the right-hand side, you basically, on a rally pullback, you're looking for demand, and you can call it whatever you want. You can call it, change of behavior. On a bullish pullback, you could also call it sign of strength or sign of weakness. Right? It's the same stuff, or you can just call it demand or whatever, right? But this is the vernacular that's used. Some say change of character, whatever. It's just pressure. It's just buying the pullback or selling the pullback in the case of a bearish pullback. All right, so you're looking for change of behavior, and we're looking for a low volume pullback after the change of behavior to confirm the turn. Okay, now when the turn must have a left-hand side and a right-hand side. So they'll have exhaustion on the left-hand side, typically in the form of SOT or a climax, sometimes both, because you have a climax and an immediate SOT afterwards. So it's just a form of exhaustion. And then on the right-hand side, you'll have a change of behavior followed by pullback, which has low volume, that indicates that it's time to go the other way. And that is the turning point. That's how it's, if I was to sum it up, to make it very simple, this is it. Left-hand side, right-hand side. Left-hand side, you'll see SOTs and climaxes. On the right-hand side, you'll see COBs and LVPs. COBs with a low volume pullback. And that would create the turning point. All right? So now let's apply some of that. We'll just pick any turning point. This one here, the market pulled back, it had a bearish pullback here. What did you have on the left-hand side? You had the wave shortening. See? From high to high to high, chop, chop, chop. Barely any progress from high to high to high, creating a shortening of the thrust situation right here. From high to the next high, barely anything. To the next high, barely anything. It couldn't even get a bar, the low of the bar above it. It's just testing and testing. This is your shortening of the thrust on the left-hand side, right? And obviously, shortening of the thrust will be registered on any momentum indicator as a diversion. The bearish or bullish diversion in this case would be a bearish diversion, where it goes from high to high to high, and this goes from high to low to low. So the momentum will pick up a bearish diversion. That's on the left-hand side. On the right-hand side, you're going to have a change of behavior or weakness, as the case is here, followed by a low volume pullback right there. That is very low volume pullback. I mean, look here. Big red down and little move up. Big red down, little move up. There you go. So the left-hand side had your shortening of thrust, which registers as divergences, right? And also actually had a climax. In fact, this wave here is 1.9 times average up volume and the biggest volume in 14 up waves. And it's at the top of a trend that fails to hold and breaks right afterwards, telling you that this is distribution. You see? This is your minor buying climax right here that terminated the move, as well as shortening of the thrust, which registered at a momentum divergence, creating the left-hand side, which is then confirmed by the right-hand side break on heavy volume, biggest in 19 waves, 19 down waves, heavy volume, with low volume pullback, changes trend. So there's just one, and I'm just picking them out. All right, you want to see another one? Let's pick a clear one and a recent one. So here, I think I showed this one. So here you see you have a rally and you have a pullback. So you look at the pullback, and you're going to notice here the market got oversold because climactic. That makes your left-hand side right here. Biggest down wave in 26 waves. Not the biggest volume on the down volume in 26 waves. This is climactic. Biggest in 26 waves at the bottom of a trend, creates the left-hand side, and after that you have a change of behavior, which creates the right-hand side and the low volume pullback right there after it that sets up the reversal. And you go all the way back up here. Right? So you have to sequence it together. I've explained very simply the left-hand side and the right-hand side. You have to see the whole thing. If you see what seems climactic by itself, it's not confirmed. It needs to have a right-hand side, and left-hand side without the right-hand side is unconfirmed. All right? And even on the right-hand side, if you have your change of behavior and all of that, you still need a low volume pullback. Otherwise, they can just buy it back up and continue the trend. So you need evidence. All right? So now this thing is gonna be the same thing here. I mean, this is a little I can't really tell that well on this chart because it's still choppy, natural gas, but whatever. Let's take a look at another one. All right. So we have this rally on crude. It's getting overbought. This is at the top of a rally. It's getting overbought. Now, I'm obviously not gonna mess with it. I'm gonna wait until it changes and goes down. All right. Similar to gold, it's getting overbought right at here. So that's creating the left-hand sides. These are creating the left-hand sides. But left-hand side needs to be confirmed. So you have to wait for the right-hand side selling, in this case, selling for it to fall. Right? So just wait. All right? Otherwise, this could just be strong buying. It's not overbought. It's just buying, and it continues to go up, 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 up. All right. Now we'll go to Bitcoin. Bitcoin. Here, I can't really tell. There's no climactic movement, and there's no possible shortening of the thrust. This is possible spring action. So this would qualify because a spring is a shortening of the thrust. If you didn't know, it's actually a type of shortening of the thrust. Right? Because it's basically low to low, and the second low is a little low. All right. So in the context of a range, it's shortening of the thrust. In the context of a trend, no. In the context of a trend, it's shortening of the thrust. In the context of a range, it's spring. All right. So here you have that, and now you're forming the right-hand side with heavy buying. So we'll wait for the pullback, and then after that, you just say, prove me wrong. Prove me wrong, Mr. Market, and that's about it. All right. Take care, and if you want to learn more, you want to look at some of the stuff that's online. David Weiss webinars. There's also his book, and I think that's enough. All right, that's all you need. All right, take care. Bye.